America's biggest public pension fund, CalPERS, seeing a 5.8% gain over the past 12 months, ending in June, according to its preliminary report, beating its benchmark. This comes as CalPERS grew its target allocation for private equity from 8 to 13%. Joining us now, CalPERS CEO Marcie Frost. Marcie, great to have you on the show. I guess break down the fiscal year and how you were able to drum up a return that did meet or exceed your expectations.
Yeah, thank you. Yeah, we're slightly above our benchmark performance. Public equity did quite well, even with the factor-weighted sleeve. We do have some drawdown risk protection still in the portfolio. And then a real success story for us was our private debt program, which was a new allocation of 5% of the portfolio going there. Team did a wonderful job of allocating and getting that money to work for us. On the opposite side of that, in a very diversified portfolio, we had private equity, performing negative, fixed income performing at a flat level.
Got it. I mean, the opportunities in the private markets and alternative investing, the reports that perhaps you are looking to invest in the VC landscape a little more aggressively, for example. Where are the opportunities and why do that, especially where venture capital specifically is concerned? Why do that now?
Mm-hmm. Well, I think we always take an opportunity to look at the various asset classes and where we're putting, the capital to work for our 2 million members. And private equity and venture sleeve in particular, there was a period of time where CalPERS had some experience and, certainly had some lessons learned during that time frame about 10 years ago. But, we have a new team in place. We're seeing high quality deals come in, and we're really looking at whether there's an opportunity or the deal flow to put 10% of that 13% of private equity working in venture. And so the team is, reviewing a number of deals that are coming in. We're excited about the prospect of re-entering that space. The other area really for us is co-investments. There was a period of time where we were very active through the co-investment lens or the co-investment space. And again, a bit of a stall period there where we have now, over the last 3 years, reinitiated or relaunched, rebooted that program and seeing some really great success there as well. So Marcie, we need to diversify our... Yes.
Yeah, I was wondering about private debt. It was way down there at the bottom in terms of the allocation in your portfolio. I think it's at 2.2%. Yes. And I wonder, is that a narrow window of opportunity that there was to really go more strongly into that in the rising rate environment when, some companies were looking for cash, frankly? Or if you think, despite the risk, that's an area where you're going to continue to grow your allocation?
Mm-hmm. We will continue to grow the allocation there. The policy target is to have 5% of the portfolio allocated to private credit or private debt, however you want to phrase that, with 2.2% of that allocation being put into play. Now, right now, we're doing that through some very, high-quality managers, and we do see opportunities to continue those allocations, continue that check writing.